Hello everyone, in this video you will learn Supplier Analysis 1 on price, profitability, and technology. The objective of supplier analysis is to analyze and compare individual suppliers in order to identify the best ones meeting the criteria. We use pricing and profitability analysis to gauge the supplier's prices, profitability, and technology. We will also use financial health analysis to understand the supplier's short and long-term liabilities and risks. Finally, we will use the efficiency analysis to assess the supplier's cost efficiency, flexibility, and responsiveness. In this video, we shall focus on pricing and profitability analysis. Technology and innovation can be measured by the gross margin. A higher gross margin implies either a higher pricing or a higher value added, or both. For profitability, we look at net margin. A higher net margin implies a higher profitability. The ideal supplier for long-term sustainable relationship is the one that, despite a lower pricing, is very profitable, so it can sustain a lower price for you. A deceiving supplier may look good on the surface, is the one that offers you a lower pricing but cannot make money from it. This is deceiving and bad because eventually the supplier will bankrupt, and so you'll have to pay for it one way or the other. Let us first perform an enterprise comparison on size for the potential suppliers of CPU for iPhone. Let's look at Intel, Qualcomm, TSMC, Samsung, and GlobalFoundries. We can see that in fiscal year 2020, Samsung is bigger in dollar value than Intel, which is bigger than TSMC and bigger than Qualcomm. GlobalFoundries suffered a loss in this year. Looking now at the profitability, the profit margins in fiscal year 2020, you can see that GlobalFoundries lost quite significantly with an even negative gross margin. Samsung is less profitable on all margins than the rest of the group. Understandable because Samsung also sells a variety of products other than the semiconductors. Looking carefully at the rest of the group, that is Intel, Qualcomm, and TSMC, you can see that Qualcomm has the highest gross margin but the lowest operating and net margins. TSMC has the lowest gross margin but the highest operating and net margins, and Intel is in between. Their gross margins of these three are high, in the range of 53 to 61%, implies that they are all technically capable and innovative. But TSMC seems to have the lowest pricing and made the highest margins. The revenue breakdown analysis of 2020 semiconductors sub-industry for the US and Taiwan shows more details. Intel has a good control of the cost of goods sold and thus a likely high pricing. It had a high spend on R&D and made tons of money. Qualcomm has the lowest cost of goods sold and thus likely the highest pricing. It also had the highest spend on R&D and made a lot of money. TSMC has the highest cost of goods sold among the three, and so likely the lowest pricing. It spent less on R&D, lowest on SG&A cost, and made the highest net margin. Finally, let's look at GlobalFoundries. Its cost of goods sold is greater than its revenue, and was losing quite some money in this year. From the breakdown of industry average and individual companies, we can perceive a company's expected price and bottom line price. The expected price can be benchmarked by the industry's average gross margin. The bottom line price can be found by the supplier's individual margins. Assuming raw materials are more or less of the same cost across the world, the fact that The US companies have a lower average cost of goods sold, but a higher average R&D cost than Taiwan, indicating a higher value added and a higher pricing of the US firms. In another word, the IC manufacturers in the US may expect a higher price than those in Taiwan. Looking at the trends of these companies over time, we can see that our observations made earlier are consistent over time. Intel's profit margins are stable and increasing. It's becoming more competitive. TSMC's lower gross margin, but highest operating and net margins are also consistent over time. Qualcomm has a high and comparable gross margins as Intel, but its operating and net margins are less stable. Finally, we note that Samsung had the lowest margins while still profitable among all. GlobalFoundries has been losing money for 3 consecutive years now. To recap, we need suppliers that are not only inexpensive, that is, to offer us a good price, but also very profitable, so they can offer us the good price constantly. Second, we can detect the supplier's expected and bottom line prices by the country's average gross margin and individual suppliers' margins. Finally, we need to look at a multi-year trend to see the stability of their profits.